isn't just business news, we're news for business people.
Good afternoon, you're watching Bloomberg Quint, the top headlines. Markets snap a two-day losing streak with both benchmarks registering healthy gains, broader markets outperform. And Reliance Communications is trading at a one-year high after Reliance Jio agrees to buy Arcom spectrum and towers for an undisclosed amount. India's only listed equity exchange BSE gains after the market regulator allows a single exchange to offer equity and commodity products. And the government issues another warning against virtual currencies, says none of them are legal tender and have no protection in India. Those are your top headlines. I am Agam Vakil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on the last trading day of 2017. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, investment advisor Sharmila Joshi and Kalra of Target Investing. They join us on the show. Thank you to both of you for joining us, and Happy New Year in advance before we move on to the next year. Today on Hot Money, we'll discuss stocks like Arcom. We'll ask our guests what their favorite large cap pick for the next year is, what their mid cap picks for the next year is, what they believe will happen with the banking space, and real estate has been a marked outperformer. So we'll ask their view on the real estate. But first, we can't miss Arcom. It's a spectacular 150% move that's happened in the past few days. So we'll ask our guests first on what they believe is the view ahead for Arcom and what did they make of this deal. Sharmila, I'll ask you first. What do you make of Arcom? This is a big move. So, almost a while ago, people were comparing it to a vada pav, that, Arcom share can buy a vada pav. Now
they're comparing it to Bitcoin.
Yes, that's the case. So
that's the transition Arcom has made in the last 20 days. I mean, what's there to say? Yes, sure. I mean, the debt restructuring plan, when he rolled it out, it sounds fantastic. And if you're really coming down from 45,000 crore debt, which in itself is such an alarming number, and you say, in the next 3 months, you're going to pare it down to this level, it's obviously market is going to reward it. But my question now is that, as you said, the stock has run from, I think it was 18 the day of the conference, to now 37. So it's given 100% return in 3 days. So I think it's time to be circumspect. Number two, maybe Samir can answer that better. I don't know what we're buying at this stage. If you're selling everything, what are we paying for now?
Yes.
I mean, what is this 37 rupees that we are paying for? And is it really worth that? So I think with that, I'm going to toss it to Samir.
No, Samir,
it doesn't make sense to me.
See, I don't have a view on it, because the only point is, if I had a negative view, I would have been totally wrong today.
Yeah.
If I would have been bullish, I would have been totally right, and there would be that thing.
Now the price is 40, so now the entire deal is done. So what's left with Arcom? So if someone is looking, because people no doubt would want to know what is happening with Arcom.
See, the only point which I see is, if they get 24 or 25,000 crores from here, they still have a good amount of land over there. So people might be thinking that if they get another 30,000 over there, they'll get an extra 5,000. So that even after paying that 45 to the loan lenders, as in that 5,000 will be left, and all these speculations come up, because generally what happens, if everyone was too negative on it, there might be a short covering which had hit it. But the only point is, a day move of 40 or to 30%, I think I rather buy Reliance, who's buying, because see, if you see the value, people are forgetting this. The amount of fiber optics, the amount of towers, and the amount of spectrum he's buying at 25,000 is very cheap. It's more like the lenders want 25,000, so he's paying that much. I think if he would have gone in the market and bought it, it would have been at least 2 times of what he's paying. So I think even if you're optimistic on certain things, you rather buy the Reliance.
So
and
it's,
forget
you
about-
think it's a good deal for Reliance Industries?
Yeah, for a Reliance Industries, I think it's a very good deal because the amount of fiber optics capex around that takes around 45,000 crores.
And what
The amount of capex which is only done for fiber optics,
Okay.
laying down that kind of fiber optics, and it takes 1.5-2 years. So, seeing that, I think it's a very cheap deal for a Reliance Industries, for Reliance Jio as a structure. And Arcom, especially, I really don't think so, except the land they have left anything to sell off.
Okay.
That's the only thing which they want.
See, and another point here is that at the end of the day, you have to, as you're saying, once you strip the assets, and if you're only looking at it as some money coming in, then you need to wait at least a little bit more because this is all on paper now. So how things really, pan out over the next 3 months is something that remains to be seen because this almost sounds too good to be true.
Okay.
And I don't know whether you can actually get closure in 3 months for a lot of these things. But of course, it's Reliance which is buying the main bit. So in that sense,
And
perhaps
maybe it's under IBC, so
Yeah, yeah.
they'll try to speed it up.
yeah.
Okay.
Because the banks give a pressure for
Correct.
the regulatory bodies to take it out as soon as possible rather than, because they'll have to start recognizing the bad debt
Okay.
this quarter.
Okay.
So that will hurt the books, and the sooner they recover that money, the better it is.
Correct.
What do you make of Reliance in this entire deal? Is it a good deal? He feels it's a good deal. What do you make of it?
Yes, absolutely. And I think when you look at how Jio has also done over these, I think they've sort of delivered much better results than what market was anticipating over the last couple of quarters in any case. And this is something I'm sure in any case they were eyeing sort of, knowing that this is going to come on the block soon. Also, I think what is to their advantage is that, to an outsider, you may not know what, sometimes there are so many things sort of in between the lines. Like, for instance, when Ranbaxy was bought out, I'm sure there were many things that were not known to the Japanese buyer when they bought it. So I think in this sense, it's all in the house. So they know what are the negatives also that they're buying. So I'm sure if they're paying this price for it, they know what they're getting for this price. So,
Okay.
and they need it at this stage because now they're going to be at a stage where they'll be 5G compliant very soon with the kind of spectrum that they're getting. And I mean, that's the way to go really. 4G is almost becoming
Obsolete.
yeah.
Okay, so that's the view that's coming in on Reliance Communication. Both our guests do believe that, it's a wait and watch approach for Reliance Communication, as, time will only tell that what the debt situation is, what else is left and what can be done. But certainly both of them agree that, it's a good deal for Reliance Industries at this point of time. But time to move on, and since it's the last day of the trading session, we thought we'll get you some picks and ideas that our guests believe can be, good counters to hold for the next calendar year, in fact. So let's start with Sharmila. I believe that you've picked Bharat Electronics as your large cap pick. What's the rationale here?
Well, I'm just looking at it at this price really than more than anything else. I mean, I would really hate to call it a top pick or anything. But, if you look at it at this price, I think there's a lot on the table there because, the numbers were good. The order book is good. You're looking at a order book of, I think, 400 rupees billion, in that kind of a range. And the fact that in terms of capital goods, they have really very high visibility and they have that advantage, which simply because of their size and what they are, they have that advantage over a lot of the private players.
Okay.
So I think that works well for them in getting the larger projects in hand also. And I mean, their capability again is in a sort of a niche over there.
Okay.
And you heard of this defense getting orders for defense for domestic companies, but that I think that has not happened. Perhaps that will in these next 2 years. And overall, there is an expectation that spending will pick up in the next couple of years as we go into elections. So I think this could be a stock that could benefit. The numbers are there. I mean, in those terms, on a fundamental basis, it looks clean. So I would go with the
What about the valuation? Is it at a fair valuation?
See, well, I feel that as compared to a lot of the peer set, it looks fair. So more on the expectation that spending will pick up more than anything.
Now, any sort of target that you have on BL? How much
I think
is it?
about 220, 230 could be a good price to look at for starters.
Okay, so that's the view that's coming in on BL. You've picked Infosys. Why are you bullish on Infosys?
See, I was earlier also bullish on Infosys because the only point is all this noise which has happened in the last 1 year is about to settle out. Whether it was severance issues, whether it was the CEO who's going to come in, all the uncertainty which is now almost cleared out. Now everyone will be looking at 12th Jan when they announce the quarterly results. The only point which I see is the attrition will go low. And the new CEO who's coming was always known for the digital initiatives in Capgemini. So over there, the plus point from the new CEO points, I don't know how long he stays or until the next friction comes in, I really don't know about. But as an investor, I think, see, it's too big for all this noise to be affected on the business side very drastically. Now the new CEO has a lot of good initiatives which he took historically in the earlier company, and the clients are very happy with the CEO. So that friction of clients versus the company and investors versus the company, that settles out. So there was a lot of selling which has happened, though the numbers were still stable. So numbers really didn't get affected because of the CEO exiting and having a lot of chaos. The pricing pressure of the stock always came out because of the investor and the promoter issues. They were never of the issues of, fundamental the company getting changed and all that. Now if he gets all those initiatives which he did over there, even a 50% to start with, then the only point is that trust within the investor community comes back. And then you'll have a more weightage towards, I'm not saying over weightage to it. So from a stock price of view also next 1 year, I think, and plus from the attrition point of view. Because if the attrition gets controlled, there'll be more.
Why are you saying attrition will come down?
Because see what happened. If you see the attrition before the last CEO exited, before 1 year only, the attrition rates went up high. Because there was a lot of issues between the promoter and the CEO earlier itself, rather than coming at the end of day. Now when those issues get out and the stability comes in through the CEO or whatever that reason is, see, eventually if I have a higher level attrition at the higher level of the firm, then all my clients get worried. Because it's a very client-based system. It's not a system. And another point is my business going to another client when the contract gets renewed. So maybe a TCS might have hired that guy who moved out of Infosys. And next year when the contract is about to renew for that client, it might shift to TCS. So that kind of, that way attrition is the highest point of looking at a tech company. Because if that gets controlled, then everything takes a little time but comes up easily. So valuation wise, any which way, I think is much more comfortable than any other IT firm. Right?
And you think structurally all the issues that were there as far as global slowdown is concerned, that will not affect?
See, the only point is they were, as in it was kind of slower in adapting to those high growth systems. See, any which way, a high absolute number will always grow at a lower rate than a upcoming industry which is at a lower absolute number. So they were not in those AI or other avenues that big number wise. So now the new CEO is always done into the digital and the AI. So whenever he initiated projects, he did only digital and AIs. So I think that's what even the promoters or the investors who have picked him up or the committee who's picked him up have always thought of it. That whatever you have previously a running business, that's your cash flow. Now how do you compound this cash flow towards all these digital and AI things which are high growth? That will be important for them.
So that's the view that's coming in as far as the large caps are concerned. Sharmila is indicating that her large cap pick is Bharat Electronics, while Samir is rather bullish on Infosys. So after large cap, let's talk about a mid cap stock that our guest like. Samir, you picked up Petronet LNG. What's your rationale?
See, the rationale is very simple. India is moving towards gas-based consumption. Right now, increasing the production of your own gas takes at least 3 to 4 years. Like even if you hear the commentary from ONGC and all, they are trying to put up more capex, but that reaps up in a 3 to 4 year lag. Whereas your consumption, whether you take a city gas distribution or whether you take an industrial consumption, these both are growing up in high double digits. Now Petronet LNG is the only guy who's importing at a higher volumes. Now they've already done a capex at Kochi. Now GAIL is laying down the pipeline, and the issues which they had were getting resolved. So that pipeline is about to come in October, I think 2018 or somewhere there, as in this third quarter calendar year. So that will give a very big leg up to Petronet. Because they have contracts to import it, but the only issue is till the time the terminal is not fully functioning. Right now they are functioning around 15 to 20% of the capacity. Even if they go 40% due to this pipeline, I think the numbers can show that drastic change. And they are doing the current capex also. So the capacity is expanding, and that's about to complete in next year for both ways. And second, the only point is, as they renewed the contracts last year, also they renewed, the long-term contracts are already at the low. So, and they are for at least 3 years. So that 3-year, 5-year contracts will help them even if the gas prices come up.
Okay.
Because now the crude is going up, so there's always a 1 quarter lag, 1 or 1.5 quarter lag to the gas prices. So that's where I think Petronet will do really well because of all this, and they are coming up with the Sri Lanka plant, which they are going to put up in 2018 mid or end. So that also, so the capacity expanding is almost doubling in about 1.5
So
years.
you're basically playing on the capacity expansion and the opportunity of gas distribution.
See, the customers are ready, the supply is ready. The only blockage which they are having is the Kochi terminal, which is the pipeline issue, and they are expanding on the current terminal.
Okay.
So when your suppliers are ready and when your customers are already ready, you just need to push the product through.
Okay.
So those are more of bottlenecks rather than anything
And you
else.
think these bottlenecks will get solved in the next
6 to 8 months?
Okay,
I think
so
they'll get resolved.
Okay, so Petronet is something that Samir is recommending. You're recommending and you like JSPL. Why?
Well, I think that when you talk of stocks, one of the reasons why all of us like stocks at this point in time is that you think that, some capex is getting done and capacity is getting added and whatever. So what I like about JSPL is that, also there is a little flavor in the market just not to look at people who are resolving issues, etc. I mean, take what this whole Arcom thing that we were discussing and what it has done for the other stocks within that space, whether it's a JP Infra or whatever.
Yes.
So this is not even in that bracket, but in fact, they did have a large amount of debt, which they've paid down considerably over this last year. Then, their capex is done. You just heard 2 days back about, that Odisha and Anshul sort of getting done. So that expense is out of the way, your debt is taken care of, and environment is looking better for metals as a whole.
Okay.
And the fact that government is also supporting you, because somewhere they're also sort of protecting the industry. They've said that for railway contracts, etc., you need to look at domestic companies. So I think all these things will really benefit a company like JSPL. I have been positive on the stocks from 120 levels, and disclosure, I own it also. But I think even from these levels, there is an upside till about 230, 240 levels.
Okay.
So I think that, they're at this moment, everything has sort of fallen into place for them after a very long time.
Okay, so that's the view that's coming in as far as the mid-cap picks are concerned. Samir spoke about why he likes Petronet LNG, and Sharmila spoke about why she likes JSPL at this point of time. That's Jindal Steel and Power. Let's move on to the next stock, and basically it's the sector that has been in focus of late, and that's the entire banking sector. So we asked our guests to pick up a stock in the banking space, and Sharmila, you picked DCB Bank. What makes you bullish on that?
Well, honestly, I'm not a great fan of the entire banking space as a whole. I think in just the last show we discussed banking versus NBFC sort of, and I do think that NBFC has more to offer. But when it comes to DCB, it's a new bank. So in that sense, some of the newer banks have dodged that NPA bullet very nicely. Here again, capex is done. They did that big expansion. Now they're at about 300 branches. They've opened, I think, about 16 in the last quarter. And now they're like sort of going slow on that bit. Their numbers are good, steady performance. NIMs are steady. So all in all, I think at this, the kind of valuations that some of these banks are getting and what DCB is getting. I mean, you do hear that that odd, like there was that whole Aga Khan trustee issue, etc. So that sort of brings the stock price down, which is precisely what has happened. But I think if I had to buy a banking stock where I comfortably saw a 25-30% kind of a return, I'd go with DCB at this price.
Okay, so DCB is the pick in the banking space by Sharmila. Which banking stock do you like?
I like IndusInd Bank purely because of the Bharat Financial and Indus Bank merger. See, right now IndusInd has around 10 million customers. Bharat Financial, if you see, has around 6.8 million. They have around 1200 branches, IndusInd Bank, and Bharat Financial has 1400 branches. So what it does is, first of all, that 10,700 crore which book is with Bharat Financial, that comes to IndusInd Bank. In that, what happens, the cost of fund for that goes to 3 to 4% down. So there's initially that 300-400 crore benefit to IndusInd already in that system on the merged entity. Then another, because these risk weight asset loans are lower, so they have to provide less for these kind of loans initially when they merge on the basis. And see, the only point is for the commercial vehicle side, if I see, this is a big leg up. Because those branches can be used to increase the centers. So right now they have around 1,000 vehicle loan centers of their own. So this almost more than doubles that number. So they will utilize, because these are more into the rural places, so they'll give that edge to IndusInd to reach those places and offer their products. So there'll be a cross-selling of big amount of products, and which I think will help IndusInd more rather than anything else. And otherwise also the IndusInd standalone was growing at a good number, and even there is like Shriram Transport, if you read the commentary past few days, they're talking about a revival coming in the Q3 and Q4. And they are seeing the signs on the ground. It's not something which is getting done. So same way, even their vehicle loan financing, the majority is CV. So that also helps them up. Third is, due to this EVA bill and everything getting organized, the organized players will have more capacity to buy the new trucks. So that also helps them out. Because the more purchasing on the newer side happens, the more benefit they get. So I'm betting on and this will get completed. The merger is expected to be in July 2018. So that's mid-year of the next.
How does it stand in terms of valuations compared to the other private banks? Let's say an HDFC Bank or a Kotak, which is pretty much the premier banks.
See, it is expensive if I see it on a standalone right now. But if I see the whole, and even if, so what we have done, we've got an indirect exposure. So we have recommended to buy Bharat Financial to get an indirect exposure to IndusInd. Because if you take the merged entity, it's cheaper in a certain sense as compared to other banks. But if you take a standalone, it's very comparative to the current private banks. So my point is that if you buy today Bharat Financial, it's eventually getting merged. The Nord came in. So today it has a 7% discount to the IndusInd price of the merger price. So that ways, I think it's any which way that 7% will get somewhere leveled to that merging price. So over there also you get that benefit. So you can have an indirect exposure also.
So you recommend both either IndusInd, or if you want to play for that arbitrage, pay Bharat Financial.
So we hold both, but our more weightage is towards Bharat Financial. Because it eventually combines to the IndusInd Bank.
So among the banking space, Sharmila has recommended, or she is bullish on DCB Bank, while Samir is bullish on IndusInd Bank, and more so because of the merger also on Bharat Financial. So that's the view that's coming in on banking space. And the last sector that we'll talk about is the real estate sector. Ever since demonetization, everyone wrote off the sector, but it's been one of the best performing sectors. Most of the real estate stocks have actually more than doubled at this point of time. So is there value still left in the real estate space? We'll ask Samir, you like Ashiana Housing out of the entire space. Why?
So two reasons. One is the 60 to 70% of its projects are based in Rajasthan. So that is a very individual-led marginal project. Developers are there. So all this RERA and demonetization have impacted very badly to, it's impacted Ashiana also, but it's impacted them on the ground very badly, the individual guys. So there's a lot of consolidation going to happen in that area. And see, if you see the other projects, so they do their own projects, they do JVs. So JV has come up big way. So now it's like 30% JV and 70% own projects. So their margins are about to improve. Last quarter they did around 32% kind of a EBITDA margin, which was the peak is 35. They've done past 3-4 quarters they did 29, 26 because of the demonetization. The overall number has been impacted due to RERA and all, but quarter on quarter basis, if you see, it's coming up. And they have around 70 lakh square feet, which is about to come up in next 2 to 3 years. So even if 1/3 comes up in next year, they'll get a good amount of selling out here. And the point is, per square feet rate, they have come up from 2,600 in 2014 to 3,200 in last quarter. So that has been able to plus point. Even in the demonetization and RERA, the prices only went below by 100 rupees. So that was a 3% or a 4% kind of hit. So I think this, and it's purely affordable housing. So what people are talking about affordable housing, this is just a pure play on affordable housing and the region it's present in. And there's another project coming up in Pune, which they have signed a MOU. So that will come 50% next year. That's around 12.5 lakh square feet saleable. So that's like 6.5 lakh saleable, which comes up. So I'm positive on that because it's already depressed in a certain way.
Okay, so Ashiana Housing is the pick that Samir has spoken of in the real estate space. Sharmila, you don't seem to be very bullish on the real estate space because you've taken a proxy to the real estate space. That's LIC Housing Finance. What's the rationale?
Yes, I think just taking off on the same theme really of affordable housing, because I think that's the big theme that will play out hopefully going ahead, because last year we saw it the big hit coming both because of demonetization as well as RERA. And if you look at the actual numbers that any of these real estate companies have done in terms of sales, the picture is quite bleak in fact. And if you hear the kind of inventories that are there in a lot of the metros, then the picture gets even murkier. I think the relief has come recently because of that whole the relief some of the builders got because of the 2G verdict. And stock prices have really, as you said, been doing their own thing. So I think going ahead, if you have to focus on something, it will be the tier 2, tier 3 kind of cities where you are looking at affordable housing as a play, which is why I think for me housing finance works as a better play, because I think there will always be requirement for that. It sort of supports my overall outlook on NBFCs also, because I think they've managed to get into those niche areas which banking has not been able to service for whatever reason. So I think LIC Housing Finance last 2 quarter numbers not very good. Obviously, I think in line with what their industry was doing. But hopefully going forward, things will pick up for them, and because of the government thrust on affordable housing. So I think from current price you can expect a 25-30% kind of a return.
Okay, so 25-30% return is something that Sharmila sees in LIC Housing Finance. With that, it's a wrap on today's Hot Money. Thank you, Samir. Thank you, Sharmila, for joining us, and a Happy New Year in advance to both of you. Ask BQ comes up next. Stay tuned to Bloomberg Quint.